How's it going, and welcome back to another episode of FUD TV. I'm your host, Elio Trades, and today we're going to be talking about how to make money day trading cryptocurrency in a bear market. That's right. The only real way to make big gains in cryptocurrency during a bear market is with day trading, and we're going to go over exactly how you can set yourself up to win on each and every trade in this video. We're going to get to it right after this. First of all, before we get to this, we want to say we are not financial advisors. This is not financial advice. This is, however, a strategy that we have been employing, a strategy that really got a lot of us over here at FUD TV into cryptocurrency in the first place, which is crypto day trading and crypto swing trading. And we're going to look at exactly how you can employ some very simple strategies to make gains even while your coins are seemingly dropping. And that is exactly what we're going to go over now. We are in a cryptocurrency bear market. As we went over in a video yesterday, we do not believe here at FUD TV that this current market cap is going to recover to its all-time highs until the Chinese market gets back involved properly. We've seen that we've just continually tumbled over the last month. We've had some little pops, little pops, little pops, little pops, but we're just keep going down. So when you look at a market capitalization that keeps dropping in this sort of jagged way, what you can see here is that if you're just holding on to your coins, there's really only one overall direction that we're going, and that's rockily down, maybe sideways if you're lucky, but not a lot of upward trajectory on any of these coins, and that's because the whole market is in a slump. But even while the market is in a slump, a bearish trend, a less bullish market, there are tons of ways that you can be making big gains. And I'm going to show you exactly one method that I use called bases of support. So I want to reiterate, first of all, that the only way that I will day or swing trade coins is if I establish that they are phenomenal coins. You can trade on a lot of different charts, but when I do my day or swing trades, I like to move an entire or a very large stack, let's say $5,000 to $10,000 over into a trade, layering in my buys as the price drops or raises, but I like to get between $5,000 and $10,000 in on a trade, and then I like to move it all out once I start exiting, and I'll show you exactly how I layer in and layer out. But essentially, I try to take one chart and trade it continuously, one chart that I really understand, or 1 to 3 charts. This is not about trading every coin. This is not about knowing about every coin. When you trade, you just need to be the expert of one chart, just one chart. And I want to reiterate that. When you trade, you need to be the expert of just one chart. You don't need many charts to make you rich when you're a trader, because if you're doing great trades and you understand the movement of a chart, you're able to profit constantly off that chart. Even if it's only moving incrementally each day by a small percentage, you're riding those gains up, down, up, selling, buying low, up, selling, buying low, up, selling, buying low. And I'm going to show you exactly how that works right now. So we're going to go into the Bitcoin chart. I've actually been trading NEO. The reason why I've been trading NEO is because I've seen tremendous volatility from NEO. I'm going to show you after going into the NEO charts, the Bitcoin charts, but I'm actually going to go over to a technical chart here so I can show you a little bit better what's going on and zoom in a little bit here. So I'm here in Coinigy, which is, I've used before. I started using it for my swing trades and my day trades, and then I started being more direct on the exchanges. Coinigy is essentially a third-party software that communicates with your exchanges and that you can sort of run multiple exchanges. As you can see on the left here, let me make sure that you can see it with this studio. On the left here, you can see that there's all these coins. The markets are all listed here on the left, and then in the sort of second to the left, you have the markets within those exchanges. Sorry, the exchanges are on the left and the markets are on the second to left column. Now, as we look at the NEO Bitcoin chart, what I want to show you guys is here. What we saw about a day and a half ago was this huge plunge downward, right? Nobody wants to see this, right? NEO was trading at, $170 or something, or $160, and then it really just plunged down here. But what we need to be aware of is that there are ways that we could have been ready for this, and the ways that we could be ready for this are by establishing what we call bases of support. And the easiest way for me to show you this is on the Bitcoin chart. But what we're looking is for a combination of a few things, right? We're looking for our relative strength index, right? We're looking for moments where our relative strength index is under 30. We're looking for instances where we are breaking basis of support. And I'm going to explain both of those concepts right now. So in order to understand what a base of support is, we're pretty much asking ourselves a simple question. Where are the buyers in the market? Where are there buyers for this coin? And what price are they buying at? That is the only question I'm asking while I am trading coins. Where are the buyers in the market and what price are they willing to pay for this coin? Now in cryptocurrency, things move so fast, especially in these bear markets. The pricing in people's minds changes day by day. What people will pay, what is a good price, what is a bad price changes day by day. Especially while trading, I would argue that anything over about 2 days old as far as a base of support is no longer useful. So here I'm looking at the Bitcoin US dollar chart, and I just want to show you guys on the bottom here, this blue wave on the bottom, that is what we call volume, which means the amount of trades happening. And this candlestick chart is the price. So as we start to see volume and price, we can start making some assumptions as to what's going on. When the price, you see here what we call this down here a double bottom. I'm gonna draw this out for you guys. You see how the price hit this level twice? We see this 82.94 price get, boom, it looks like a W here. And that's because it comes down, it hits this price, it bounces off. And then it comes down and it hits this price and it bounces off. And if we zoom in even more, we can see that these green bars here of huge volume, it's actually the volume so high, it's running into the candlestick chart because the volume's so much higher than these other bars. And I just want you guys to see that this is what we're looking for when we establish a base of support. We see that when the price hits 82.93 or 82.94 or whatever, we're seeing tons of buyers rush in and jump on that price. We've established that 82.94 is the price at which, on Binance at least, Bitcoin is being jumped on. And this is no longer a risk, this becomes an opportunity for the community globally that supports this coin. So how do we go about using this information now to make smart trades? Because we need that information not just to understand it, but we want to make smart trades. So I'm going to zoom out just a little bit just so I can have some room here on the chart. But essentially what we're doing here is we want to find a way where we can trade below this number. So anything, when Bitcoin now goes below, anywhere below, and I'm doing this with like a sloppy arrow here because the chart's not going to let me pull it up. But I see that these bases of support are very strong. It's hit it twice now, and it's bounced off it twice. So if Bitcoin goes below 82.94 today or tomorrow, in the very short near-term future, then I believe that there are enough buyers at this price point of 82.94, right? Essentially 8,300, right? 83. That's the price point where if it goes below that, I'm not saying it's free money, but I'm saying I have a strong, strong belief that there are enough buyers globally to at least get me back to that $8,300 mark. So as soon as it drops below $8,300, I start layering buys. Once it goes down to 82.50, I'm buying 25%. It drops down to 8,200, I'm buying another 25%. It drops down to 8,000, I'm buying another 25%, and so on, and so on, and so on. There's no hard and fast rules for how these percentages go down, right? Every coin, every day. This is about you guys starting to get really familiar with 1 or 2 or 3 charts. And I want to stress here, you don't do this with charts that are just random coins. I'm sorry, I had to say it. You don't do this with coins. You do this with blue chips. You do this with the best coins possible. You do this with Bitcoin, Ethereum. I personally put Neo in this category because I know a lot about Neo and I believe in Neo. And I even put Stellar Lumen in this category as it's a sort of newer blue chip and they have a platform play that they're developing. So I just see that there are some coins that are so strong in their value proposition, their path to adoption, that I know once there are buyers in the market at a certain price that show me with these bases of support here that they are strong buyers at a certain price, that combined with my belief in the projects as a whole, I have confidence moving large sums in and out of day trades on those coins only when they break their bases of support. Now, some useful things to see are these exponential moving averages, which you see going in here. I'm going to take off the Bollinger Bands because they're a little bit confusing right now, or I guess I just made them bolder. Well, anyway, when you see that you go under, these coins go under their exponential moving averages, each exponential moving average holds a sort of different place in the coin. You know, at one point, one of the EMAs might be acting as support, one might be acting as resistance. But as we see here, you know, as we took this dive down, the price dove well under almost all of the EMAs and was bottoming out, really touching the bottom of the Bollinger Bands, which indicates that it's at the bottom of its real price support. Then we combine it with another indicator, the RSI, right? And when RSI is under, RSI is this bottom indicator here. When RSI is under 30, it is an indication that the coin is being oversold. What that means is that there's sort of a rubber band effect. When you stretch the coin, you stretch the price in any direction, there's only so far it can go before it needs to sort of either break or get sort of pulled backwards. And this rubber band is sort of, you know, RSI, you can think of it like a rubber band, and it shows you when the rubber band is really, really stretched out, when there's too much selling or too much buying. And so when the RSI is up towards, you know, over 80, when you see that the RSI is over 70, 80, that's when you know there's most likely going to be some sales, right? Because that means the coin is overbought, or the stock or anything is overbought. But as it drops below 30, that's a good indication that the coin or the stock or the token is being oversold, which means that some buying power is most likely going to come in here. So we use these, no indicator is perfect, guys. No indicator is perfect. If you're going to use any indicator alone, I would say you want to use bases of support. You want to use price indicators mixed with volume indicators. Those two together can give you a lot. If you're looking for extra information on if you should or shouldn't buy at the moment, RSI is another great indicator you can use. But remember, we're asking one fundamental question, which is where are the buyers in the market? Now, if we switch over to the Neo chart, I'll show you a trade that I was fortunate to participate in. And we can see here on the Neo chart that there are some serious bases of support here. So I'm going to draw in what I see as some clear bases of support here. I'm going to actually do it with the straight lines. But, you know, we can see here that once this line, this green line down here, has been hit, we see it once over here on the 26th. We see it on the 27th. And then we see it again here on the 2nd. We're seeing that in the most recent versions of data analysis that we can use, we're seeing that this is a tremendous, and we see that, look at this green bar right here. Look at this volume, right? More volume than it has had since the 24th of January, where we see this huge run up in price on the left here. So right now we're seeing that this right here, this support line of 120,000 Satoshis, 120,000 Satoshis is acting as some serious support here. So I know I was fortunate enough to draw my support line in, or a sort of a weaker support line in here, up at about 137,000 Satoshis, because we had seen it bounce off of this a few times. And as it came down, I started seeing this whole area as a broken base, right? And so I started buying. And then I was almost out of Bitcoin when I got down here, but I sure was happy to sell once I got back up there. So I just want you guys to see, in one night, I layered in some buys and layered in really one sell, and I was able to make about 20 to 30% on my Bitcoin, right? So I started with, I put into this one 0.1 Bitcoin, and I ended up with almost 0.14 Bitcoin, or 0.13 something Bitcoin. So that's awesome, right? I made a lot of dough. I made a few $100 on that, and I was just trying out the Neo day trading. So I just want you guys to understand that as this continues, right, I now have a line of support here at 120,000 Satoshis, right? Where as I see this price potentially headed down towards that base of support, and there even is another base of support here at 132,000 Satoshis as you see it bounced off of it, but there's just not the volume down here to justify it. So I don't call that a real base of support because I just don't see the volume corresponding down here to give me as much confidence in it. But as this price kind of comes down here, I'm looking to sort of see this. Hopefully, you can look at this as two different ways now. Instead of just hoping that the bear market ends, you can actually hope that it gets a little worse. So if you understand the bear market, you understand the volatility each and every day, you understand, okay, we're no longer in a bull market where we just want to hold on to our good buys and watch them accumulate in value. Now we got to move. Now we got to be smart, and now we got to make trades based upon bases of support. So this is a method that I've found, and as you go through the charts, I'm just going to show you guys, as you see bases of support that have clear volume behind them, I'm just going to show you some that are jumping out to me. Here we're seeing a really good base of support, another good base of support, right? Anything down here, free money, right? And then we're seeing it broke this base, or not quite broke this base of support. Neo is a tough one because it's not breaking bases. It's been so bullish. But anything down in here, right? Because of this support line, anything in there, and we see it come up, and we can find more examples. So the Bitcoin and Ethereum charts right now are maybe even the best places to be trading this. We're seeing so many bases of support, so many bases of support that can be really looked at here, and I'm just gonna pick a few out here. Boom, right? We have obviously this one, boom. That one's not as good, but these two bases of support are huge, right? We have this huge base of support over here, tons of volume. Look at this run up. And then as we start to look at the run-ups and start to see when they bounce off their bases of support, right? Like, what do the run-ups look like? Can we analyze the run-ups and start to see what potentially the gains will look like when they do bounce off these support lines, right? When you do see the run-ups, are they ones that you can sort of start quantifying and start analyzing and saying, okay, well, this kind of looks comparable. All these bounces look somewhat comparable, and well, is this bounce going all the way up here then? Or is it going just this far? And, use the data, use the chart. Don't be emotional. This is not about fundamental analysis. You do your fundamental analysis before you even get to these charts, right? You're only looking at 3 to 5 charts. You're making very simple decisions. Has this coin gone below its base of support, right? Has it done that? And then worst case scenario, right? You draw your base of support in here, right? Let's say you draw your base of support in. It starts breaking your base of support. Let's say you drew your base of support in right here on the 10th of January. It starts breaking and then it keeps breaking your base of support, and you don't know what to do. Well, what you do is very simple. You keep buying. As it breaks the base of support, you are betting on this coin because you understand that it will return to the base. Bases will be respected on good coins, especially if you've established your base properly. It means that there are buyers in the market today or yesterday that believe in that price. And that means that you're much more secure in going in on a bet on the down spike. And you see on coins like Bitcoin, where there are so many people watching this coin, if you were to keep buying all the way through this dip here, and you were to buy up this whole dip here and keep going down, 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 well, you would have, even if it just gets up to the base here, you would have made this whole run up on some of your buys. But you guys see what's going on here. The point is, when you see a base of support and you see that it gets broken, you are able to, with confidence, start layering in buys as that coin goes down, knowing that there's going to be an incremental pop from it breaking that base of support. Now, those pops, you shouldn't look at those as double ups, triple ups. You're looking at those as 10 to 20% gains. Once you hit 20% gains, you should feel really proud of yourself. You've taken something and made it 20% more in just a day or a few hours. And then you can literally, in some senses, you're sort of taking that off the table by cashing it back into your Bitcoin, or you're back into your Neo, or back into your Ethereum, whatever you're using as your bank, even if it's US dollars. So I'd say that these are pretty interesting ways that you can play the market. This is one way that you can look at making money in a bear market and look at day trading in a new light, in a simpler light, where you're just taking a very simple approach. These aren't any complex tips. This is not based on rumors or myths. This is based on charts of facts of real buyers that have spent real money at certain prices, and you're taking that data and using it to make your own decisions as to what will likely happen in the next few hours today. So that's my little breakdown on how you can make money day trading in a bear market. Yes, it is a bear market, sadly, but we're still gonna make money, and we are still here to help you through this FUD. Here at FUD TV, we are not giving up. We believe that you can make money each and every day, even during a bear market, and we're here to prove that to you now. So we hope you guys enjoyed this video. If you did benefit from this video, if you liked it, if you learned from it, please give us a like. If you think that we missed something or want us to go over something a little better, please leave us a comment under this video. Obviously, this is a bit messy, what you're seeing here, but the point is very, to me, should be very clear, which is when you see a base of support, you can start to rely on it when it's on the bigger blue chip coins, and you can start to bet against it once it drops below that base. Once again, this is not financial advice. We are not financial advisors. We thank you so much for checking out FUD TV. Once again, I'm your host, Elio Trades, and I'm out of here.